What is up, guys? Stas here. So the stock market futures are currently red as the S&P futures are down 0.2%, down about $6. The NASDAQ futures are down $25, down 0.25%, with the Dow Jones futures down 0.3%, down about $80. And in this video, like we always do, we're going to be breaking down the markets, taking a look at some technicals, and I want to strategize with you guys and go over what are my plans heading into this week in the stock market. And to do that, we're also going to be going over 10 stocks, individual stocks that I'm watching and looking to trade heading into the market this week. And if you guys actually stick till the end of the video, I'm going to be going over some bonus stocks as well. So jam-packed video today, a lot to go over. If you guys find value in the video, I'm sure you will, hit that like button for me. Let's try to get 350 plus likes on this video, and check out all the free links down below in the description box if you want to be further connected with the Strive Smart community, and if you want 2 free stocks from Webull valued up to $1,400. Again, all of that is linked down below in the description box. So let's just kick off this video going over what happened last week in the market to give you guys some context before we jump deeper into the futures. So last week was a textbook consolidation week, right? You guys can see it here on the S&P 500. We didn't break out of 3150, but we didn't break below $3,080-ish. So that means we were just consolidating between 3090, let's say, and 3150, meaning the S&P was in around a 60-point window on the 16th through the 19th of June. And yes, on the 15th of June, we had a very explosive day, and that actually led into the 16th of June. But for the most part, last week was consolidation other than this massive spike up in the S&P 500 on the 15th of June, right? And pulling back here to the 4-hour chart, another thing worth noting, despite the consolidation, right, we're in an overall uptrend on the S&P. We're still in this channel here, as you guys can see on the 4-hour chart, and the fact that we're holding it and we're holding 3,080 in specific, that is very good for the bulls, right? Now, going over to the ES, which again is the S&P 500 futures, you guys can see we saw a pretty big gap down in the beginning of the futures session. And mind you guys, for those of you all that don't know, every Sunday at 6 p.m. Eastern Standard is when the futures market opens, and that's when you can see S&P futures, Dow futures, NASDAQ futures, right? Gold, silver, crude oil, the list goes on. And you guys can see we gapped down from 3057 actually all the way down to 3040. We popped up to retest that EMA. We got rejected, and we actually pushed all the way down to 3020. And the action that we're seeing now in the futures, it's very clear, it's evident that we're filling the gap that we opened up, right? So this is actually a pretty critical spot for the S&P futures right now. And honestly, heading into the morning, into the morning and throughout the night, I'm going to be watching this level right at 3060, right? Because we already filled the gap, it seems like, up to about 3050 to 60. But if we break out of this gap that we just filled, that is going to be very bullish, right? If we get anywhere from 3060, 3070 and out of 3070, and we do something like this on the intraday chart here on the S&P futures, that would be very bullish, right? So that's one scenario that I'm watching out for here for tomorrow. And another thing that could happen is, okay, this little gap fill here that we've seen from 3020 up to 3060, the bulls exhausted it. That could be also a potential scenario here, and it could be an opportunity for the shorts, right? Because if the bull rally got exhausted, we hit resistance here where the gap opened up, and we start to dump off, that could be an awesome short opportunity, whether you're playing short-term put options on SPY, which is an S&P 500 ETF, or you're shorting, anything, right? Anything in the S&P, or you're playing some of these leveraged ETFs or ETNs that go up when the markets are going down, right? That could be a signal, okay, we didn't break out of the gap. we're going back down, okay, that could be a signal to short the markets, right? And same thing with the NASDAQ, same thing with the Dow, right? We gap down, we're starting to fill the gap now, and we're at a resistance point overall on the NASDAQ, just like the S&P, right? So I'm watching 9,900 to about 99.20 heading into tomorrow. If we end up breaking out of there on the intraday chart here, watch out for a potential mini rally in the NASDAQ, right? And pulling back a bit on the NASDAQ futures, guys, might as well just look at the NASDAQ index itself. You know, if we break under 99, 9,800, you guys can see here, I mean, 99.50 is a big support, right? If we end up going under these levels, you know, 9,800, I think overall the NASDAQ's in need for a healthy pull down to the point where we might be going back down to 9,700, right? 9,750. That's a downwards target that I do have here on the NASDAQ, being it's an old all-time high, right? So we should hold it as a support. And it's also at the 50 SMA on this 4-hour chart, again, right around 97 to about 97.50. So those are some points that I'm watching on the NASDAQ here. Dow Jones futures, guys, again, down $80 here. Seems like we're holding the 180 SMA on the 4-hour chart, which is good, but you can realize and you can see it's very clear that this could end up being a descending pattern if we break that 180 SMA, because although we are holding the uptrend, there's no doubting that, right? We're holding the uptrend. We're also seeing lower highs forming overall here on the Dow. We can see a peak 27.5. If this is the second peak at 26.3, and again, we dump under this uptrend, that's a recipe for disaster, at least for the bulls, right? That's a bear's dream. That's what the bears want. But for the bull's sake, that is not going to be good. And ultimately, a main level I'm watching on the Dow is around 24,800 to about 25,000, as that is a pretty main level of support that's coming up, right? And again, if this gap down in the futures continues into tomorrow, expect for that level to be reached. And many people think, yeah, this is going to happen, right? Markets are going to drop because the bull rally, at least the recovery from the lows, many people think it's been exhausted. It's a little bit overdone. We've ran up 30-40%. So a lot of people think that this head and shoulders here could end up playing out, right? Left shoulder, head, right shoulder, right? You can see it on pretty much all of the main indexes here, other than the NASDAQ. But on the Dow and the S&P, you guys can see, yeah, it could end up being a little head and shoulders that's forming here, especially if we end up dumping down under 3K on, you know, the S&P. And it's very evident on the Dow that we're seeing a potential head and shoulders too. So let me know down below in the comments, guys, what are your thoughts on the markets at this point? I think we're due for a sell-off. And honestly, do I think we're going to go all the way down back to the lows? Probably not, just due to the amount of money that is being pushed into the markets by the Fed. You guys have to understand, as more money's being pushed, it's devaluing the currency, but it's also inflating the prices of dollar-denominated assets, which in this case, stocks, at least here in the U.S., they're denominated by the dollar, right? So in theory, the price of the stocks should go up. That is why many people are saying the Fed's just inflating a bubble. It's getting worse and worse and worse. And it's true. And if they keep printing money, guys, which they will, honestly, in my opinion, at least for another year, 2 years at this point, you know, if they keep printing money, you better believe that this market is most likely going to continue going up. And guess what happens once they stop printing money, once they try to bump the interest rates from 0 to 2%, whatever, like they did back in 2018, they tried quantitative tightening. Next time they do that, the markets are going to get crushed, guys. That's why the markets took that 20% haircut back in 2018. And if you guys were following the channel back then, we were covering this stuff like crazy, right? Dow took a 26,000, was at 27,000, took a hit down to 22,000. NASDAQ took a hit from 7,600 down to about 6,000. And the S&P took a hit from about what was it? 2,900 down to about 2,300. So you guys can see the role of the Fed in the market. And when they try and do tightening, raise interest rates, The market doesn't like that, right? And as long as the interest rates are at zero, if they go negative and they keep printing money, I think the markets fundamentally will keep going up. And it's not because of the fundamentals of the actual businesses, but it's just the way that the market is structured at the end of the day. So let me know down below in the comments, guys, what are your thoughts? And now let's just get into these 10 stocks and a couple bonus ones, starting off with Nike, guys, ticker symbol NKE. Nike's actually reporting earnings on the 25th of this month, and what they're actually expecting is a loss of $37.3 million, and this is actually expectations from about 30 analysts here, and they're actually expected to lose 11 cents a share on sales of $7.4 billion, and they actually report these earnings on Thursday. And to give you guys a bit of an idea of what Nike reported in the same quarter last year, the company actually posted 62 cents of profit per share in EPS, with sales of $10.2 billion and net income of $1.1 billion. So comparing to last year, Nike's supposed to do about $3 billion less in sales. They're going from a 62-cent EPS to an 11-cent EPS, which is expected from the analysts. So it's clear that the whole situation, the CV, is obviously wrecking companies left and right, and it's also hurting some of the conglomerates out there, some of these big-name, stable, blue-chip companies like Nike, right? So we're going to see what they report on Thursday. You guys can see it here. And by the way, for the beginners out there, ThinkOrSwim, if you're using it, look for these bells. This means that a company's reporting earnings in the next couple of days or whatever on the day that you see the bell. So just keep an eye on the bell, and if you hover over it, it shows you exactly when the company reports earnings. So overall, Nike could be an entry point, honestly. If they end up, holding a technical spot here at about $95, they hold the 180 SMA here on the 4-hour chart leading into the earnings report. This could definitely be an entry point. And something worth mentioning, guys, I personally don't hold stocks through earnings if my goal is to short-term trade them, right? So I'm going to wait until after they report to potentially enter into the stock, even if it means I miss the opportunity, right? And that's just the way I do things, how I've always done things. I wait until after a company reports to enter, because a lot of things could fluctuate the price of the stock if you're entering before earnings, and it's too risky for me, right? Because if a company gives negative guidance, they lose in terms of, or they see a terrible loss in the numbers, worse than analysts, you can get smoked on your position, and it's happened to me. That's why I don't do it anymore, and it's been a couple years since I've held through earnings, and I like it that way, me personally, and I'd love to know if you guys do the same thing down below in the comment section. So the number one stock is Nike, ticker symbol NKE, and another one here is MasterCard. And you guys can notice all of these stocks, most of them, if not all of them, are showing similar patterns to the markets, right? You saw the S&P is showing that lower high potential here. We hit 3,200. Now we're seeing a lower high, 3,100. Same thing with the Dow, right? We hit a high at about, 27,000. This could be a lower high at 26,000. You're seeing the same thing with these stocks. Nike, we hit a high, 105, lower high now at $99. This could end up being a descending pattern if we break $95. Going back to MasterCard, right? MasterCard, if we fail at 290 and we fail holding this gold 180 SMA on the 4-hour chart, this could very well turn into a descending pattern as well, right? Because we already hit 315. Lower high at about 308. So it's really imperative for the bulls for MasterCard to hold 290, 295, and that is what I'm looking for to get into the stock, quite honestly, because if it breaks that level, I might turn my gears from looking to go long to actually maybe shorting the stock, right? Maybe shorting it as, if it broke 290, as it could go down to maybe 280 based on this chart. Heck, maybe down to $270, right? So MasterCard It's an interesting one, watching it in particular at about 290 to 280. And two Chinese stocks here, one being NIO. This has been my money maker, guys, and you all know, if you've been following the channel, I've gotten in and out of this one 3 times over the past, I'd say, 2 weeks, and it's one that's just been crushing it, right? It seems like every pull down, it rallies back up and pushes for a higher high. And one thing, guys, is stocks like this, yeah, there's a lot of reward, but you have to realize it's not going to last forever. Not saying that NIO is going to crash. Not saying it's a bubble. I'm saying that don't get overconfident if you're winning trade after trade after trade with a specific stock, because then you might end up getting in, hoping you're going to win again, and having that cockiness, that confidence that you're going to win again, and then you get absolutely smoked. And that's kind of where I am right now with NIO, because again, I've gotten in about 3 times. I've made 3 moves over the past 2 weeks where I've made a nice amount of money. And not that I'm getting cocky now, because I've been in this game for a while now. I know better than to just get cocky and just make that mistake. But I'm letting it cool off a bit. That's all I'm saying. I'm letting it cool off a bit before maybe re-entering, right? Because ultimately, at this point, the stock's gone from $3 almost to $8 just in the month of, really in the past month. So I think a healthy correction spot for NIO could be anywhere in the $6 level, and primarily in the lower $6 level. I would like to pick up shares maybe at $6 on this 180 SMA here on this chart. On the 4-hour chart, you guys can see it's pretty overbought. You guys can see RSI is almost at 70, so I'd like it at $6.50. $6. That's kind of where I'd definitely pick up more shares for NIO. And another Chinese stock here is Baba, right? Baba hit 225, pretty strong resistance from a couple months ago, back before the crisis occurred here in the U.S., back in February, right? We hit 225, and before that, we actually broke 225 and filled up to 230. And now that we hit 225, failed to break out of it, but we're actually holding 220 as a support, old resistance. This could also be an entry point, right? Keep an eye on this. We're also holding that 50 SMA on the 4-hour chart to the point where, okay, if we consolidate tomorrow a bit, start to gap up, or some point this week, maybe not tomorrow, we might fill up to 225, and from there, $230, again, like you guys saw a couple months ago, that could be another price target. So watch Baba here from 220 up to about 230. That's about a 4% potential for profit. And a warning, guys, these Chinese stocks are under scrutiny because of potential delisting. I've been on the channel before saying that ultimately I don't think they will get delisted. We got that news a couple weeks ago. The stocks took a beating there, and since then they've been recovering, and I'm still, behind that, saying I don't think they're going to get delisted, especially the big ones like Baba, JD, Tencent. Maybe even NIO. NIO's in that group now where it's getting to a point where it's becoming a more respectable Chinese stock. So I don't know. You guys can leave a comment letting me know your opinions. I don't think they're too under pressure to get delisted, but hey, I could be completely wrong. Another one I'm watching here is Apple, ticker symbol AAPL, and this kind of ties into the potential market drop we're seeing now. Again, futures are down. We saw Apple actually is closing down stores in South Carolina, North Carolina, I believe Arizona, and another state that I'm forgetting, due to the CV cases increasing in multiple of those states and many other states here across the U.S. And this poses a big risk to businesses. They're potentially going to close again, maybe a second round of closures here. And this poses a big risk to the markets in general, right? The stock market, because, yeah, if we see another wave of cases, a big second wave here, and stores close again, right, as the markets are trying, or the economy's trying to reopen, that's definitely going to be a blow to the markets, to the stock market, and of course, the economy. But at that point, guys, if we do get that big drop in the stock market, guess who's coming to the rescue? His name is Jerome Powell, the Federal Reserve. They're going to print even more money. And quite honestly, that's where I'm going to buy more stocks and actually take advantage of the don't fight the Fed movement, which pretty much insinuates, okay, when the markets go down, you know, it's smart to buy the stocks because, again, like we talked about earlier, assets, stock prices, real estate, dollar-denominated assets, as more dollars go into the system, those prices get pushed up, right? So it makes sense to actually buy on the dip, knowing that the Fed is going to come in and push that wave right back up, guys. That is just how the market is structured now, whether you want to accept it or not. It's a lot different from what it was 50, 60 years ago, right? So another one here is Target. TGT. We talked about on Friday last week how I like Target anywhere above $123. You guys can see there's a pretty big resistance there from about a month and a half ago. So watch out for that break. I'm looking for a move up to about 128 to 130 bucks. That moves about 4 to 5%. So I'm watching Target there, ticker symbol TGT. And another one that has been a bit quiet is Virgin Galactic. And notice how we're at a very pivotal point here where right at that wedge, we're right at the resistance of the wedge. We're holding $15, $14.50 very strongly here. And although the, what's this little thing called here? I was going to say the strengthometer, if you guys see this little, you know, the 3 bars here, the strengthometer was saying Virgin Galactic's going down. Now it's saying it's consolidating, although I don't really look at that, but it does show you overall what the trend is, you know, kind of in a way for the different stocks, right? Now we're consolidating, and I'm thinking that SPCE, you know, although we're in a downtrend, there's no doubt about it, anything above 17 bucks is going to be a breakout, right? And this one requires a lot of patience because ever since it rallied a couple weeks ago to the 20s, you know, it's been a slow decline in price. Ever since that rally back towards the beginning to the middle of May, we've gone from 21 down to 15. But I think, again, going back to that $17 point, if we break out of that level, that could be where the next wave of momentum, the next bullish pop comes to the point where we might go back up to 21, and above that is 25 bucks, which is the next level that I'm looking at, which also could be a price target, which could give us an upside of 40% from where the stock is currently right now. And 2 gold plays here, GDX and GLD. I'm watching these for sure. No doubt about it heading into these next couple of weeks. Again, as the market pressure could be going down, as CV cases are spiking, as stores could potentially be closing here. And we're already seeing gold going up, guys. Gold's up another $8. The futures here up 0.5%. And we're at that technical point literally right now that we talked about last week, and that is a very critical point, being 1760. Notice how we failed there multiple times over the past 2-3 months here in the markets, and I've been on record saying 1800 plus on gold. That's where I think it's going, and this can literally be the moment where we're going to 18 plus 100 gold if we break 1760, and then after that, if we break 1780 to about 1790. So that's kind of some technical points there. Those are a couple to watch on gold. And GDX, going back to it, you guys can see we're kind of in a wedge as well, just like SPCE, but we're breaking out of it, right? I think overall, a breakout area for GDX is going to be around $34, and from there, we might knock out $34.60. That's a big resistance, $35.50, right? So these are a couple of points on GDX to watch for after, if it does break out of this wedge, which again, it's already doing. As on Friday, we saw about a 4% day in the ETF. And another gold play here, we talk about this a lot, guys, is GLD. This is a gold ETF that literally tracks the price of gold. GDX is a miners ETF. It's a bit different, but GLD, the way it's structured, it's literally tracking the price of gold, right? So we're seeing the breakout here. Very good sign on the 4-hour chart. And again, if gold continues to push into 1800s, GLD is going to be a very, very solid swing trade, right? And it's a great way to honestly hedge against the markets because, again, We're seeing stocks go down, starting to go down at least. If this continues, gold goes up, GLD is going to go up in value too, right? So there's going to be some way to actually hold your value there as stock prices go down. And a couple of bonus ones here, guys. Although restaurant stocks have been getting crushed, I believe that if we get more closures here across the country, and we're already seeing Starbucks, one of them, struggling here, you know, this could end up being a nice short position. We can see it's right on the uptrend here at about 75 bucks. It's holding on this 4-hour chart, so watch for this breakdown. You know, if we do drop there, that's going to be pretty bloody, in my opinion, when it comes to Starbucks. We saw about a week or two ago, they've lost about $3 billion from sales, just from CV. You know, that's not good in this previous quarter. You know, and again, if they close more stores, that's going to be a lot more pain for the particular company and the stock itself. So watch for that break there. This could be a potential short play. Same exact thing with McDonald's, right? McDonald's is looking like a head and shoulders waiting to happen itself, right? We already did the left shoulder. The head seems to be forming. Now the right shoulder, if we break under 185, that could be a short, right? And another one, the last one here, is going to be Disney, guys. This is a head and shoulders as well. Left shoulder, head, as we popped up to about 125, and now as you guys are seeing resistance under the 50 SMA on the 4-hour chart, we're looking to make the right shoulder. And if we dump below this trend, guys, 113, 114 bucks, we might be dumping down even further, right? So those are the main stocks that I have on my list this upcoming week, guys. Some of them short plays, some of them long plays. And I'd love to know which ones you're watching down below. Let me know in the comments, what are your plans, your thoughts on the markets in general. And yeah, that's it for this video, guys. I hope you all do well in the markets this week. If you guys did find value in the video, again, let's try to get 350 plus likes on this video. And you guys can actually, again, get 2 free stocks down below in the description box from Webull, valued up to $1,400. If you want them, again, that's free money. All you have to do is put in $100 into the account, and that's actually when you get the stocks after 7 days it takes for them to actually settle. And I do get a kickback as well. I also get free stocks, and that's a way to actually support the channel and all the free content that I'm putting up here on YouTube. So I really do appreciate it if you guys do use my link down below. And that's pretty much it. I'll catch you all in the next video. Stay safe out there. That's the most important thing, guys. Stay safe out there as always. Peace out.